Well, let's get to today's guest. When he last came on the program, it was to go and preview the earnings from the US tech titans. Now, there was plenty of interest. The number of downloads of the VOD on our website was massive. So we thought we'd go and get him back on now that most of those tech titans have reported, to go and get a snapshot, an assessment, a report card as to what was reported. Let's bring in Lachlan Hughes from Swell Asset Management. He comes to us now live via Skype from the Gold Coast. Lachlan, welcome back to the Global View. Great to go and see you there. Now that we've had most of those tech titans go and report, what was the general feedback?
Yeah, hi David, great to be with you. So I guess overall for big tech, largely they were very good results. And if we were to lead off with Amazon, Amazon really was an A+. Across the board, the business was very strong, whether it is digital advertising or the cloud, or even the way they held their Prime members after a substantial price increase. So really an A+ for Amazon. Microsoft and Alphabet, I really believe, was as an A result, and again, very good strength across the board. Digital advertising has been a concern for many in the market, and I think what Google or Alphabet showed you during the quarter was they have a very resilient advertising business. And probably contrast that with Meta, which really was, I would say, a B+, and Meta's still dealing with some challenges with Apple iOS. And this is a multi-year journey to work around some of the issues they're facing, but they're showing good engagement and good success with Reels. So look, it was a B+, but really across those companies, we were very happy with all the results.
Just on the Meta, of course, I saw Snapchat as well, Snapchat, I should say, get hit pretty hard after it released its results. The threat posed by TikTok, a lot of people, of course, are looking at that platform and saying, well, that's just taking market share and making it very difficult for those platforms to grow. What's your sense as to how great that threat is?
Yeah, so what happens with these types of businesses are you really have to follow the engagement first. So we're seeing good engagement with Instagram's TikTok competitor, which is called Reels, and then monetization always follows engagement. So really it is engaging well. It's a successful, it has had a successful launch. And I think TikTok, look, I mean, it really had a big jump in terms of short form video content, but really Meta is catching up to it now. And I guess one of the things that is interesting for a business like TikTok, the FCC in the US has written to both Apple and Google to ask them to remove TikTok from their app stores. So I think, look, the risk of them actually delisting TikTok is probably low, but it certainly isn't zero. So look, there's a big focus on TikTok, but I'd say TikTok isn't without its challenges as well.
So Lachlan, you've graded the latest quarterly results pretty strongly across the board. The B+ is the worst score at this point. Looking ahead though, what were some of the messages that we could go and garner from these reports? A lot of people are talking about the secular trends that we saw towards cloud computing, online retail sales. Is that still intact in your opinion?
Oh, 100%. So really the cloud was very strong for each of the cloud companies, whether it was Amazon's AWS or Microsoft Azure or even the Google Cloud. They're showing significant strength in the cloud. And really, if we were to go back 5 or even 7 years, a lot of the reason you'd see people move to the cloud was driven around cost. They could get a better deal if they move their workloads to the cloud. But what we're seeing today in the cloud is people moving for different reasons. Security is one of the big ones, and I think that's not going away. And if we look overall, around 10% of workloads today are actually in the cloud. So there is a huge runway, and I'm talking at least a decade ahead of runway for these cloud businesses. And of the ones we like the most, it really is Amazon. I think Amazon's set itself up as the cloud leader. It's still growing very strongly. And if we look at a business like Amazon, our valuation for Amazon AWS, the cloud business, is $1 trillion. And I think as of today, you pay about $1.4 trillion for Amazon. So really you're paying $400 million for the retail business, which is a huge business in the US and a very large business globally. And e-commerce, again, has very good trends behind, strong tailwinds behind it. We're around, in the US, 15% of total retail sales is coming through e-commerce today. So this shift is going to run for a long time too. So that's really cloud and digital advertising, which sets up a business like Amazon to be in a very good place for the future.
Just with Amazon and a number of these big companies that could be potentially split up in time, not necessarily as well by antitrust. So what do you think that looks like in the future? Do you see there's a grounds that maybe Amazon might go and split its two divisions and have a designated cloud and designated e-commerce line?
Look, it could be. I don't think Amazon would do it by choice. I'd say it would be something that would be forced on them by the regulators. At the moment, though, I see that as a fairly low risk. I mean, longer term, look, I mean, it could certainly happen, but we'd see that as a value creating opportunity for Amazon. If it was to spin out the Amazon AWS cloud business today, you'd really be forced to value the retail business, which is a huge business, particularly in the US, like a nascent advertising business, which is growing very, very quickly. And I think one of the great things for Amazon's advertising business is they sit in a very nice position. When you buy something on Amazon, you might be there to buy a pair of ASICS trainers, and when you have your credit card out and you're ready to purchase, they can show you an ad for I guess an equivalent pair of Nike. So they're really showing you ads at the purchase decision, which is a very, very coveted place to be for all advertisers. So this is just a nascent business, it's growing. And then we also have Prime Video, which is investing heavily in content, and just in the last quarter has acquired the rights to Thursday Night Football. So really they're still investing there. And if you look across the sum of the parts, this is a company that we see valued at more than $2 trillion. And I guess you could pay $1.4 trillion for it today. We think that's a fantastic opportunity for long-term investors.
Just to go finish off, trends when it comes to online digital advertising, really important. We keep hearing about from a macro perspective, recession risks out there. We know that we've had 2 consecutive quarters of negative growth in the US. A lot of people think the same is in store for European markets. How did that come through? Was there any evidence that we're seeing a pronounced slowdown when it comes to those advertising?
Yeah, look, absolutely. So I guess the key leading indicators for us here is if we look at housing and autos, and housing particularly has tentacles into many different parts of the economy, including the consumer. And look, the consumer's under pressure at the moment. There's no doubt about that, and sentiment is being affected. So I think for digital advertisers, they've kind of been facing 2 things. One is declining consumer confidence, which is something that is really, I guess, something that is still deteriorating today. So we saw that in each of the results. If you look at a business like Amazon and Google, they still both showed very good growth in their digital advertising business. So it's not all bad. And what you saw, I guess, in the most recent quarter is the lower quality advertising businesses, perhaps like a Roku or a Twitter or a Snapchat, really struggled with their results, much more so than the businesses like Google, which has the dominant franchise in search, and which AdWords, where you're advertising on Google, it's very resilient. So they've seen good strength in that part of the business. But going forward, I think digital advertising will be affected by declining consumer confidence. And I suppose at this stage, we don't know where the bottom is in terms of consumer confidence, but we do know that for each of these digital advertising businesses, if we look at the valuation, they're very attractively priced today.
Lachlan Hughes from Sport Asset Management, thanks so much for joining us here on The Global View. Looks fantastic outside there. Go and enjoy the rest of the day.
Thanks, David. Great to be with you.